Bitcoin price pumps as Dovish Fed signals 3 rate cuts in 2024. Where next for BTC? Disclosure: crypto is a high-risk asset class. This article is provided for informational purposes and does not constitute investment advice. By using this website, you agree to our terms and conditions. We may utilize affiliate links within our content and receive commission. The Bitcoin BTC prices pumping on Wednesday amid a dovish reaction across traditional asset markets to the U.S. Federal Reserve's latest policy announcement. BTC was last up 3.2% on the day and trading in the upper $42,000s, with bulls eyeing a near-term retest of yearly highs printed earlier in the month in the upper $44,000s. As expected, the Fed left interest rates on hold at the multi-decade high level of 5% on Wednesday. Fed forecasts slowing inflation, easing growth, softening labor market, room for rate cuts. But the central bank's quarterly economic and interest rate projections showed that the bank expects inflation to continue falling next year, giving them the room to start cutting interest rates. More specifically, the Fed forecasts personal consumption inflation (PCE) inflation to drop to 2.8% by the end of this year and 2.4% by the end of 2024, not far above its 2.0% inflation target. Meanwhile, forecast a continued slowdown in the economy from a 2.6% growth rate in 2023 to a 1.4% growth rate in 2024, and a slight further softening of the labor market to an unemployment rate of 4.1% versus the current 3.7% rate. As per the latest dot plot, a summary of each individual Fed policymakers' expectations as to where interest rates will be in the coming years, slowing inflation, easing growth, and a softening labor market will give the central bank room to start cutting interest rates next year. The median policymaker projection forecasts 325 BPS rate cuts by the end of 2024, while no policymakers forecast higher interest rates. Fed announcement pumps easing bets. From a financial and crypto market perspective, the latest Fed policy announcement fed into the narrative that easier U.S. financial conditions and more liquidity lay ahead, explaining drop in U.S. yields, the U.S. dollar, and the pump in liquidity-sensitive U.S. stocks and crypto. The CME's FedWatch tool, which monitors U.S. interest rate futures markets to gauge the implied probability of future interest rate moves, last had the chances that the Fed starts cutting interest rates in March at close to 75%, up from closer to 40% one day ago. Interest rate futures markets now also imply a more than 60% chance that the Fed will have cut interest rates by at least 150 BPS by the end of 2024, up from around 20% one day ago. Where next for the Bitcoin BTC price? At current price levels in the $42,800s, Bitcoin is now close to having retraced 50% of its most recent mini pullback from the yearly highs it hit on the 8th of December around $44,700. Analysts widely attributed that pullback, most of which occurred on Monday the 11th of December and saw the BTC drop back as low as $40,180, as down to a mixture of profit-taking and a wipeout of overly greedy bulls using leverage in the BTC futures market to chase the price higher. But conditions in the futures market are indicative of less overly excessive bullishness. As per CoinGlass, the open interest-weighted funding rate of leveraged Bitcoin futures positions was last at a more healthy, but still bullish 0.16% versus recent highs on the 9th of December above 0.35%. That sets the stage for a more sustainable short-term price rise, with the lower risk of leverage wipeouts triggered short-term price dips. Near-term price predictions are likely to remain bullish, with Bitcoin currently benefiting from expectations of a near-term Fed easing cycle, optimism about institutional adoption with spot Bitcoin ETFs seemingly on the brink of gaining approval in the US, and about other themes such as 1. The Bitcoin issuance rate halving in April 2024, and 2. The potential for a more pro-crypto president to get elected in 2024. That doesn't even mention recent bullish technical developments that are likely to encourage chart-focused traders to continue buying/betting on more upside. Bitcoin's dip buying fueled bounce from its recent retest of the psychologically important $40,000 level, where its 21 DMA also resided, is a strong indicator of resilient demand and exactly the kind of technical price action that would be expected during a bull market. The next major upside target remains the 2022 highs in the $48,200s. Whether the Sandra rally that has already lifted Bitcoin over 13% can continue into the year's end and extend to nearly 30% if Bitcoin was to end the year at $48,000 remains to be seen. But price risks certainly seem tilted to the upside. Enter your email for our free daily newsletter, a quick 3-minute read about today's crypto news. Sign up. The site is protected by reCAPTCHA and the Google privacy policy and terms of service apply. IMG SRC equals https://simg co/p/ml300 JPEG alt equals image class equals img ID equals newsletter pop-up img